Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me once again Brent Cook. He's been a frequent guest on this show, and that is true. I've had him here because I really do value him very highly, both for his code of ethics and also as a talented geologist with some very practical ideas about how you may be able to improve your odds of success when investing in the mining sector, especially. This show is focused more on the precious metals sector. Brent is the author of an excellent newsletter called Exploration Insights, and you are encouraged to visit his website to go there to learn as much as you can about what Brent is doing, and he also provides some free information there that is, I think, very valuable, and also a chance to sign up for his newsletter, Exploration Insights. And welcome, Brent. Thanks for joining me again.
Thank you, Jay. It's a pleasure to be on your show again.
Always good to have you. Now, forgive me, but I failed to write down. It's Exploration Insights is the name of your website, I believe. ExplorationInsights.com. ExplorationInsights.com. So, listeners, you're encouraged to go there and take advantage of what Brent provides free of charge, and then you may want to consider signing up for his newsletter if you are an investor in the mining sector. Well, Brent, recently you talked about the extreme difficulties of discovering commercial-grade gold deposits, and in fact, you had a very interesting chart that you showed me that showed in recent years, a decline in major discoveries being made. And a couple of years back, 2001, 2003 or so, I think early in the 2000s, there were a few large copper gold porphyries, but very few and fewer all the time, seemingly standalone gold projects. Of course, I would expect some of that is just simply a function of the easy deposits being mined long ago and continually. Obviously, the easy ones go first. But in any event, you point out that in order to improve the odds, which are very much against successful discovery, I think something like 1 in 1,000 new discoveries turn into commercial successes, and something like only 1 in 10,000 actually find deposits that have more than 4 million ounces of gold in them. But you mentioned to improve the odds, geologists need to really follow a scientific method, the scientific method that we all learned in grade school, how we're supposed to approach science, and how we're supposed to practice science, how we're supposed to think about things. And I would think that most geologists would go along and do that. I mean, I would think that would just be a natural. But are you suggesting that maybe not all geologists, or maybe all companies that hire geologists, are not abiding by or following the scientific process?
Well, to some degree, Jay. I think first off, those statistics which put together by Newmont, that 1 in 1,000 prospects become a economic deposit of some sort, those are just across the board and include every bit of moose pasture and sagebrush some companies out there raising money on. And you can improve those odds dramatically by investing in companies that know what they're doing, with geologists know what they're doing.
Sure.
It gets us to the scientific method. And in theory, you postulate, make a thesis, test that thesis, look at the results, reevaluate your thesis, and test it again. And I think, that's sort of what you need to do in the mining sector, exploration sector as well. The difficulty we have is that most of what we're looking for is not apparent from the surface. So we're getting little bits of information scattered across an area, call it, 1 or 2 square miles, and trying to formulate an idea of what might be below the surface, an economic ore deposit, based on that data. And the real problem that a lot of geologists and companies face is that they don't have a good sense of what an economic deposit really should look like. Mm-hmm. It's more of a treasure hunt, if you will. Mm-hmm. And they get a bit of encouragement, they raise more money and a bit more encouragement, but in the end, most of these companies end up with a property or a prospect or a deposit that is really marginally economic or not economic. And the reason behind that is, I think geologists as a whole are very optimistic, and they keep thinking that, the next drill hole is going to hit it. Two, there's a lot of luck involved in this because there's so much uncertainty. And three is, there are not enough deposits out there to support the 1,000 or 2,000 companies that are exploring. And that's a whole industry of brokers and bankers and lawyers and this and that who live off raising money for these things. So that's the third issue that one has to consider. So getting back, I think, to your original question, I think what you need to do as an investor in this sector is understand what a deposit looks like, and more importantly, what it doesn't look like. And even more critical is the company and people you're backing need to understand what an economic deposit looks like versus an uneconomic, and get out of any project that is not looking economic. And that's what I spend all my time doing, is if you can find that fatal flaw, you save yourself a lot of money, and in fact, you end up making money.
Yeah, well, saving money is making money ultimately. If you lose it all, you don't have enough to put on the next deal. So that's a pretty common experience over the last 3 or 4 years for a lot of people, I'm afraid. It seems to me, Brent, that there is maybe multiple agendas then in this industry aside from finding a commercial ore body. I mean, if you can just keep the stock rising and keep the money, like I used to work with a mining engineer in my past. Ricardo Campoy used to talk about how most of these companies up in Vancouver are mining people rather than mining gold.
I'm afraid that's true.
So we want to avoid being among those people who are being mined, and we want to be investors in companies that are mining for gold. Of course, I think one of the easiest, most logical places to look would be to companies that have had people that have been successful in the past. So we know who some of those people are. You mentioned also recently in your in something that you wrote the factors that are required to improve the odds of success, such as the ability to conceptualize. I think is what you were talking about, a legitimate target that offers the possibility of a meaningful economic deposit. What might be one of the first things that you look for, Brent, when you start to see some numbers coming along? A company starts putting out its press releases about some drill results, for example. What are some of the things that go through your mind first in determining whether it's has a legitimate chance of becoming a commercial deposit?
Well, clearly size. I think if you're going to get involved in this sector, speculating on exploration, you don't want to find a small deposit. You want to find a big deposit. And that's where you get your 10 or 20 or 30 baggers in the share prices. If you can just identify a prospect that has, number one, enough size potential to interest a major company to come and buy it. So you look at size, then obviously grade, and then third, you got to look at metallurgy. Metallurgy is often the killer in these things, and that you can find an enormous deposit, but if you can't get the gold out economically, it really doesn't matter. So those are the three things that I really look at. And again, you've got to go to the people running the program and ask them, what do you need to see to make this thing work? What are your cost parameters? What do you think it's going to cost to build the mine to exploit the deposit you're looking for? What's it going to cost per ton to bring it out? What's the metallurgy going to be? Just those basic questions. And most of these companies, I'm afraid, don't have that sense. Most of them are just drilling a hole to see what's there and hoping they hit. You need to have, before you even go into a deposit or an exploration project, a conceptual idea of what you have to find to pay for the capital and mining costs.
You mentioned also teamwork and open minds to revise and adjust the exploration target concept. I guess sometimes people can take a position, a geologist even can take a position, an idea, a theory about how something was laid down, and that how a deposit was laid down, and unless they're willing to revise their thinking and also give and take among the team of geologists and other scientists, then you could go wrong that way, I guess, by not being open with an open mind, right?
Precisely. I would guess 80% of the discoveries out there certainly involve a good portion of the geologic team being able to conceptualize what's going on, reevaluating the data, and adjusting their exploration model or thesis to match what they're seeing. And if they're not seeing what they think they should be seeing, fail. You get out of it. That's the fatal flaw.
No room for arrogance then and stubbornness. You need to let the truth. You need to be open to the truth, I guess, is what you're telling me. And then money. I think you mentioned the cost of capital that's going to be required to put a mine into production. I mean, clearly this is a hurdle. Some of these little mining companies with 10, 20 million market caps wanting to find a deposit that requires $1 billion capital. The chances aren't very good without diluting themselves from here to kingdom come, I guess, huh?
Well, it depends on the quality of the deposit again. I mean, I can point to a company like Reservoir Minerals, who are in joint venture with Freeport on a discovery over in Serbia. And, they found a deposit that's worth, many billions of dollars. But they structured a deal such that Freeport has to provide them with an economic feasibility study in order to earn their 75%, at which point the smaller company, Reservoir, owns 25% of something that's been defined and has economic parameters behind it at zero cost to them. So that's, that's one way, I think.
Sure.
It can work. But you need to, as rapidly as possible, define how big this is. And I want to invest in companies that are finding something good enough that someone's going to buy it. I don't want to be involved in a company that finds a mediocre deposit, which means they've got to raise all the money to go through the feasibility studies, environmental studies, social studies. That just drags on, and you end up being diluted.
Absolutely. Well, we've seen it more often than not, for sure. But there certainly are companies out there. Brent, you mentioned Reservoir Minerals. Is there anyone else you would like to mention? And I know that there's also this cycle where you want to catch these companies as at the very start of their discovery when they're finding one of these monsters, right?
Yeah, I think so. I mean, one company that I'm invested in, another one, is called Mirasol Resources, which have got, I know them well. They're technically amongst the best. They've gotten the order of $23 million in the bank. They just struck a joint venture with Yamana in Chile on a very high-level exploration concept that at surface looks really, really encouraging. It shows me that there's the potential for size and grade there. So Yamana is going to come in and spend a bunch of money determining if that works or not. That's the very early stage of the upside. If trenching and subsequent drilling confirms this thesis, this company stands to do really well.
Yeah, I'm glad to hear you say that because Mirasol is one on my list, and so I'm very excited to hear you say that, Brent. I want to thank you very much for coming on. Again, it's explorationinsights.com, folks. Go there, take advantage of some of the information that Brent provides, some good guidance, some good guidelines on how to reduce the risks, increase the odds of success in the mining sector. And Brent has been around this business for quite a while as an exploration geologist. He writes an excellent newsletter geared towards investors in this sector. So thank you very much, Brent, for joining me again. I look forward to doing it again sometime in the near future.
Thank you, Jay. So do I.
Thank you.